Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And just about 2 minutes away from the end of the trading day, the trading week. Caroline Hyde, Taylor Riggs, Katie Greifeld counting you down to the closing bell. To take us beyond that bell, it's our global simulcast. Of course, it's Carol Massar, it's Tim Stenovec, as we bring together TV, radio, YouTube for, well, a view on the week that is higher in the green, up 1.7% on the S&P, Carol.
Yeah, and once again, you know, we keep saying this, we're seeing some buying into the close. We've been bouncing around a lot. I've been watching Apple. Not a ton of movement today, but over the last couple of weeks, we've seen it bounce up about 12% and up 6% this week alone. So some of those big tech names, we're seeing some money move into them, Tim.
Yeah, it's interesting. Even though we are getting a buy toward the close for much of the day, the S&P 500 was in this relatively narrow range of about 1%, struggling for direction a lot of the day, moving between gains and losses at least 10 times today.
Really interesting. I think that sort of just speaks to the volatility, Caroline, of course, that is still underway in these markets. We've talked a lot about the VIX and Katie sort of hovering down, not spiking up the way that we'd seen in previous weeks of blowing up above a 30 handle. And a volatility is measured by the MOVE index as it relates to bonds, really sort of outperforming, if you will, some of the volatility within the equity markets.
It is fascinating to see those two asset classes diverge in terms of volatility, in terms of performance too. But like you said, Taylor, I mean, bond volatility is going up, stock volatility is going down. I want to know which reverts first.
Yeah, is it the bond market where everyone always tries to say it's smarter, but $2.6 trillion rout on the global bond market? I mean, it has been a pain trade for Q1. Meanwhile, we count you down just 17 seconds until this market closes. The bells ring, the euphoria is there for a Friday, which sees as though the S&P 500 does manage to push on up by 0.5%, actually hitting more the higher end of the trading range for the day. 23 points to the upside, 4,544, let's call it, is where we trade. On the upside also is the Dow Jones Industrial Average up more than 0.4%. That means that the Dow is currently on a 5-day, the laggard up 0.3%. On a 5-day was the S&P up 1.8%. The outperformer on 5 days is actually the Nasdaq. It's down for the day, off by, well, almost 0.2%, 22 points lower. But on a 5-day basis, up almost 2 percentage points for the Nasdaq. Let's pull out. Let's see where the small caps managed to find its day's trade, because the Russell 2000 also in the green, but only by 0.1%. Taylor.
What?
Carol.
Oh, yeah. No, where? Or me?
You, Carol.
Carol, sorry, I always get that one wrong.
It's okay. It's a little bit crazy. I mean, come on, right? We're all dealing with so much. Hey, you guys, we were just talking about volatility, and I was checking out the volatility index, the VIX, you know, moving back almost down a full point, and it's down about 3 points this week, Taylor. So we are seeing some complacency come back into the market. Despite the, you know, swings we see on a daily basis, it is interesting to see the VIX back off again. But makes sense, right, considering the equity gains.
Certainly. And, you know, Carol, when you talk about the equity gains, we're certainly seeing that on a sector level as well. For the radio audience, the sector winners, the sector losers, and we dive down 2 sectors to sort of give you a broad-based view of what is really going on. And Carol, it feels pretty risk on, right? It's energy, it's banks, it's those financials, food and tobaccos. You think about some of those inflationary hedges, you're up anywhere from about 1.2% to 2.3% on the day alone. There's not a whole lot of losers today, speaking perhaps to the broad-based rally, even though volumes don't feel very high. But for some of the losers, I think what's notable is it's really concentrated, Carol, within the tech sector, software, auto components, and semiconductors, but they're only off about 0.5%.
All right, so you set up all of the major groups that have certainly seen some gains today. I'm going to continue with that thought, some of the gainers that I picked out here. Energy, you know, Taylor, you talk about this so much, and it makes sense. And certainly today, on a day when we saw the U.S. and the EU talking about a deal when it comes to LNG and gas going from the United States into the European Union. So E&P names, particularly in the gas sector, definitely gaining. So Coterra Energy, this was top in the S&P 500. It was up about 7%, and we've seen it kind of move up about 20% in the past week alone. Also wanted to take you to a name that was top in the NASDAQ 100. This company announcing a 4-for-1 stock split. And we're talking about Dexcom. This stock was up about 2.7% in the trade today. And then missing Romaine, know he's traveling, having a good time. We're happy for him, but he likes those small caps. And this name was definitely a standout for me. The ticker is Hook, and it's pronounced Hukipa. It's top in the Russell 1000, and it's up about 10%. It was up as much as 27% in today's trade. I'm not quite sure why. Quarterly updates yesterday, it missed on the EPS line, did beat on revenues, and even RBC coming out, cutting its price target, but did maintain its outperform. But nonetheless, just thinking of Romaine, hoping he's bringing
You
some
got a
croissants.
week without him interrupting you, Carol.
I know.
He's busy swigging champagne over in Gay Paris.
Just hoping he brings back croissants and red wine. That's
Exactly,
all I'm
yeah.
asking. All right, Tim, what do you
Yeah,
got?
looking forward to that. You got the gainers, Carol. I got the decliners. Let's start with the Honest Company. Shares sinking today, down more than 22.5%, trading at $4.68. Having its actual reaching levels, the worst levels ever, not even just a 52-week low, worst levels ever, all-time low for the company stock. Down at more than 70% from the IPO back in May. This after the personal care company reported fourth quarter results that missed expectations and gave an outlook that is seen as disappointing. And then an activist story today, Huntsman Corporation shares falling 11%. The chemical company falling the most in about 2 years after Starboard Value fell short in its efforts to revamp the board of Huntsman's. The investors there rejecting its nominees. And then Carvana, the online used car purchasing platform, down 13.5% after Wedbush analyst estimated wider losses than he had previously thought for the online car selling company. He wrote a note, quote, deteriorating credit and affordability trends increase near-term challenges.
Tell you what's had near-term challenges of late. If we go cross-asset in the FX market, it's been the yen under significant pressure actually for today. We see a little bit of a reprieve in yen selling. We're actually up 0.2%. But the yen has been under so much pressure because of a Federal Reserve that looks far more hawkish than the Bank of Japan, and also oil prices that are leading into that as well. Interestingly, oil prices really dictating what's happening in the FX market. Canadian dollar, the loonie up 0.5%. The Norwegian krone outperformer on the back of the week, as we see for the first time ever, actually, first time in 3 weeks, oil gaining on the week. Now, this is as we see supply side concerns with Saudi Arabia. We look at, Houthi rebels in Yemen potentially being an impact there. We also see, of course, this on-again, off-again concern about whether indeed we will see some sort of impact of sanctions on oil and energy over in Russia. We hold back on it today. Certainly we hear from Europe that that's not the way they're going, but instead they look to find some sort of reprieve in the gas price spike over in Europe. That means natural gas in the US rises 2.7% as liquefied natural gas is going to find a new home in Europe, we understand, and we could indeed paint a prettier demand picture here in the United States. I'm looking, though, overall at steel prices on the upside. Zinc up 0.4%. Interesting note coming from Goldman Sachs really saying look out for further potential for the likes of aluminium, zinc, copper to rally on the back of Russia, Ukraine. And meanwhile, I look at a sovereign bond market that once again is a global sell-off. Canadian bonds sell-off, Norwegian, we see Japanese, the Danish, the Aussie. I mean, from Asia to Europe to the US, we're seeing real pressure in yields going higher, Taylor.
You see that certainly within the U.S., Carol, with full faith and credit. And I think our wonderful producers are going to pull up the weekly moves because this is pretty unbelievable when you think, Carol, about where we have come in just 1 week alone. I think we note for the 2-year yield, we're up about 35 basis points on the week. That is now the biggest weekly move higher since 2008. So that really sort of puts this move into perspective. The 10-year yield for the week, we're matching the biggest sort of move higher that we've had since 2019. Before that, you've again all the way go back to about 2016. So we're in sort of different territory here, and this sort of kicks us off into our big conversation, not only about the Federal Reserve, as we've talked a lot about how they sort of tackle this, and sort of the economic data that we're going to get next week in the face of some of these challenges.
Right, and how do we take that economic data that we get next week, right? What's the big story here? There's so many conflicting, I feel like, themes and opinions at this point, Katie. There's people who are positive on the market. We just had Ryan Dietrich on over at LPL Financial, and he is very optimistic about the outlook and thinks you should be, putting some money to work in those cyclical value names. There's other folks who said, time out, put cash on the sidelines, wait to ride this out. So it's hard to say, Katie.
I mean, personally speaking, all eyes on the jobs report. I mean, that I feel, as we've been talking about stagflation, I feel like for weeks, if you have a labor market as hot as it has been in the U.S., that kind of really puts some of those fears to rest. And I mean, a lot hinges on this report.
The 485,000 is the number that economists surveyed by Bloomberg are estimating right now. We expect that to change over the next few days. It would be a decline from the 678,000 that we saw in the most recent
Do we believe
report.
any of the estimates anymore?
I mean,
the consensus is so
and
wide.
the range is really big too. Look, look, nobody knows what's happening in this market. I want to know what the next hawkish note we're going to get from one of the banks about what the Fed is going to do, because I don't know how you top Citi's note today.
Yeah, I mean, we've had Goldman come out, Citigroup, I think Morgan Stanley's a note that in the last few days we've been mentioning, and Katie had mentioned sort of the WIRP function as well. When you take a look at the swaps and sort of really now pricing in about 8 total, we should say, here for the year. Carol, just though on the flip side of that, you get calls then from BlackRock saying maybe the dividends are the place to be, and that feels defensive. And
I keep thinking about what Peter Cheer said, that maybe the Fed's already missed the curve. They were so behind it, and then now what you really have to worry about is moves that the Fed does that slows down an already slowing economy. So there's lots of discussions. Fingers crossed we get some developments on the war in Ukraine. We will certainly be watching it over the weekend. All right, guys, that's a wrap for our cross-platform coverage on radio, TV, and YouTube. Have a safe weekend. We'll see you all again on Monday.